Well, good day, all. Ira Epstein, and here we are with your SPDR ETF stock market wrap-up. And this wrap-up is for the evening of Tuesday, the 4th of April, 2023. Well, today was all about the JOLTS job, the JOLTS numbers, those jobs, those ads that come out, wage pressure. It all fell. We're under 10 million jobs offered. We've been running 10.8, 10.6, and suddenly we're down under 10 million. So the Fed will probably think that's something, a step in the right direction. The question is where? There were jobs lost in healthcare and the like. Not a lot, but there were. So now we got to go to the jobs report that we're going to get later this week. And that's what you've got to be looking at in a big way, okay? Remember, it is Good Friday coming up, so you got to take a look at when these reports come out, how you're going to react for them and everything else. Very important. Now, today, as we looked at the market had to make decisions, and the decisions were immediately the naysayers. They're going to say, that's it, the pivot's here, the wobble's here, the Fed has no reason to go up in May, and maybe the radicals will go, they're going to drop rates in May. Number one, in my not so humble opinion, there is zero chance or 1/1000th of a chance that they will drop rates in May. Not going to happen. It could. Anything's possible in life, so I have to leave the doorway open to be realistic, but I'm betting against it. If the jobs report is weak, that will mean that they don't have to go up the quarter point at the meeting. But I think the Fed, regardless of all this, is going to wait for several reports to come out, give them a trend that locks in where they can see a runway getting down to 4, 3, 2%, whatever they're going to stick with at the end of the day as the real inflation number. We're not there yet. So that's how I'm looking at this report today. One day doesn't make a trend. Got it? One report doesn't make a trend. What has happened is oil didn't give back anything from the big move we had. That's impressive. When I come to Schlumberger, I want to walk you back to yesterday if I could. Here we are. You have an awful big gap in a chart. Notice this gap, how the market came back and filled it and then fell back. Now you've still got, what, a gap from here to here. Gaps on charts, if you go through them, they like to be filled. So what did the market do today? It's making its run to fill it. That's what's going on. What's the pattern? Still bullish. Higher lows, higher highs. Where did the market stop? I teach you over and over here that first challenges of major moving averages are often, the key word is often, not always, often, where a market will run into resistance and or support. Depends where obviously the averages are. So I looked for the 200 to be that, and I looked for there. It's ideal when you run into the Bollinger Band with it, which you did here and you did here. And that tells me, okay, the extremists were going down, not happening. The extremists were going to launch Schlumberger up there, not happening yet. Could it happen? Anything could happen. What is the parlance here? The big bet would be it's not going to happen, and that's where the pros are taking money off the table. Are they bullish? Maybe. You're overbought as can be. Any reading over 70 is overbought. Do I think the pro is buying over 70? I do not. That's what I teach in my charting courses. I do think the market's going to look to see how the break goes and where you're at, but no, I would not be coming into the market fresh here. When we take a look at Charles Schwab, I keep reading about more problems. It was a TD, Toronto Dominion Bank. They're having a big issue. They have a big stake in Charles Schwab. And they're getting hit, and Schwab is getting hit. And this is again because of what they own on their books. And if there is money coming out, they got to sell. The Fed sets it up in this way. Let me explain it and backtrack just a moment. When you get a deposit, and you can declare, are you holding securities long-term or medium-term? There's nothing to say you can't switch back and forth. But what most firms would do, I'd say I'm going to hold them all long-term. The moment you shift them over and you now into the short-term, you got a new problem. Because long-term, you don't have to mark to market value. They're sitting there at face value on your books, and you're not impacted. The moment you shift them, you got a new problem. Now you got to start taking haircuts on them. And that's what's been happening here to some degree. That's what I'm guessing. And it's keeping pressure on this for them. Schwab's very dependent. Any brokerage firm that doesn't earn commission from trade is dependent on some other source of revenue. I owned a discount stock brokerage firm. I sold it, I think, the first Boston when they were around and others. I understood the game. I saw the banks coming in, and we were great until the banks decided they all wanted to do what we were doing, and then it was time to get out. Commodity firms would fail, all right? Where are they going to make money, all right? Same thing. That's what I would expect would be the case. So you've got to take that money and earn interest on it somewhere. Commodity money is completely handled different, so you'll know in our business than it is in this business over here. You can't take that money and do those type of things. They're barred from it. Everything in the commodities, if your broker does anything with the money, it's so short term it doesn't matter. That's because they've seen the failures. They learn the ways. Do I think a revision's coming? In a major way. This did it. This is going to change the game again, and it won't surprise me if commission-free trading goes the way of bye-bye. We need to charge something in order to make money to stay in business and facilitate the trade. I see that happening. I can see it. If the Fed steps in and makes these changes, that can change that business. I'm just a guy that's done it. In gasoline, this is the spot yesterday to take money off the table. The first time you're hitting Bollinger Bands. The trend has been up, but you're not embedded. You got up there. What are you hanging around? You're going to say, what if it embeds? Then I want in. If it doesn't embed, no. That's the spot where I think the pros come out. Tesla, noticing that ARK, Kathy Woods, is selling more Tesla. She's buying some ultra-light company that makes like helicopters, electric ones. This sounds like a great business. And something else, so she's selling off Tesla shares. I think today she sold 57,000, last week 125,000. A little pressure on the market. But it's been overbought. It did its thing. It got to the Bollinger Band. If you understand Bollinger Bands and know how to work with them and understand the concept of how John Bollinger created it, I didn't create it, but I found a better mousetrap by using momentum with it. And once I modified that, I think I have a better trap. So if you take the course, you learn the trap. You see me talk about it every night. Eventually, you're either going to believe it or not believe it. But I can walk you through. You're hitting the band. You want to walk away, but not fully until you lose the embedded reading. Then you want to walk away as the game changes. You don't want to be short when you lose the embedded reading. You're out of this play. Market goes right back to the 18-day average. We can go over this over and over and over. Do every one of these signals work? No. Flat out no. Do the vast majority? Yes. But you got to learn how to play with them. You got to learn that there's always a risk. Nothing works all the time, okay? Other than me hitting that. All right, so we hit the upper Bollinger Band. We're settling back. You're overbought. Nah, there's not even a trend. You got a lower low, higher high. And what market's getting hurt? Industry. We see that over and over. What do you think the JOLTS part is? They're watching industrial jobs slip. Company upon company cutting, tech companies cutting, McDonald's shutting down corporate offices. Tomorrow we'll probably get the announcement as to what's going on, is they're going to cut a lot of staff. Internationally and nationally, they're going back to making money for the investor. How do you do it? You got to cut costs somewhere. You're seeing today Meta, I think it was Meta in there, or no, it was Amazon, cutting in their gaming division 100 jobs today. But it's 100 here, it's 200, it's 1,000. That's what's going on to make the bottom lines leaner, meaner. The days of the COVID are over. You got to go back to the other business models, and that's what's going on. In home builders, you got up to the upper Bollinger Band. I talked to you yesterday. I said how I think the home builders have got this figured out. They're not building tract houses. They're doing one-on-ones. They're doing fine with it. But you still hit an upper Bollinger Band. You're not trending. What do you think the pros are doing? Just the way they covered shorts here, I think they came out there. It's a trader's market, not a trend market. Energy, no, you buy it. I want you to buy it if you're not with me. All right? Buy up there. Please buy up there. Overbought into the Bollinger Band 100-day average. Now, the smart money's coming out of the market, and they'll come in on their terms. It'll either embed, not embed. It'll give them a better set of ways to go. In the gold market, you're knocking on the door to come on out of this market. The trend has been up. You're making your run at the Bollinger Band. You're overbought. Silver, buy, Miss American Pie. I am the happiest guy. The one market that I did put out, and I can back it up for the government and everybody in my recordings and my written updates, was silver when it embedded. And today I said, buy, you're at the Bollinger Band. I'll look on pullbacks to come in, but this was the spot. $1 rally, by the way, a 4% rally, and the price is big. Futures up $1. That's a big move. Copper. Okay, the copper here, COPX, looks so different than the futures contract. The futures contract is falling and collapsing to the downside in a daily downtrend. This is in an uptrend. I don't know what to do. I don't like when they're not working together. TLT, what do you think I would tell you if you were sitting next to me and you hit the upper Bollinger Band and you're not embedded? You get that elbow in the ribs. Did you put in that sell order? Did you really? Okay. UUP, my report. So let's take a look. On my report, which goes off our website tomorrow, I've given you a special report. I'm doing price counts in it, something you may never have seen. It's unique to Linn and Associates. Then I walk you through the more research charts, the 5, the 15, the 30-year. That's the seasonals. I'm going to walk you through on the futures markets, the daily and the weekly charts, build them from scratch, all the indicators I use, and then UUP. And I'm going to tell you what I think the market's doing, where I think it's headed, and you could take it from there. How do you get it? Move your cursor up here, give a click to the icon, take you there. You can also go to iraepstein.com. Under research, you'll see a currency report. It's going to disappear tomorrow, and that's it. You will never see it again. My reports, when I put them out, folks, I just want them there for 3 days. It's real important for that because they're timely. They're not meant to be, 6 months later, look what you said. I may put out another one in between, all right? This is for now. Could I be clearer? I write a newsletter every day. It's for now. When I look at this, if you embed, I get bearish, but 27.58 is the low of the Bollinger Band. Today's low in the market was 27.60. You're about there, okay? I think the pros are taking some money off the table. FXE, if you hit the upper Bollinger Band, I think they'll take money off the table, but I am bullish in the euro, I am bearish in the dollar, and I show you why and how it's all done in that. If you like these reports, I ask you to give me a thumbs up here. It costs you nothing to do it. I will see you first thing in the morning. Take care.